Hello traders and welcome back in a new week ahead video. This is Mohanad Yakout, senior market analyst at Scope Markets, and today is the beginning of a new trading week. However, it's the last trading week of the month of June and the second quarter of the year 2026. So this is something that we can probably expect some volatility from at the back end of this month when the monthly candle closes. However, apart from that, we do have a couple of other things to look for on the economic agenda, on top of which comes the US jobs report. This is really something important for us to watch because probably we have seen how inflation numbers are just continuing higher and how the Federal Reserve has been basically following a hawkish stance since the end of last meeting. So, can we expect the jobs report to support this hawkish stance, which will probably mean a higher dollar against all of the currencies? We will have to see. We also have a couple of inflation data coming out from the EU economy, which we'll be discussing shortly, and what's been happening in the Middle East across the weekend. Is it over, or probably we can see some more escalation or tensions during the week that should support the oil prices? This is something that we will also be discussing. So if you want to watch all of this, again, we'll also be discussing the technical analysis of key financial instruments that probably most of traders are looking at. Make sure that you stick around to the end of this video. Starting off with the economic agenda for this weekend, we can see that basically Monday we don't really have big ticket events or high risk events that should affect markets. So it's probably a slow start to the week, which is normally basically the situation with Mondays. Usually the big data comes out on maybe Wednesday, Thursday, and then Friday. But usually on Mondays, we don't really have high ticket events. Moving on to Tuesday, tomorrow, we do have the Reserve Bank of Australia's meeting minutes, which is key if you actually look or trade at the Australian dollar. However, the key thing for me tomorrow is probably when the European session kicks in, and you can see the inflation data coming out from France, Italy, and Germany. So probably it will give us a look on how the inflation is behaving in the Eurozone. And probably we all know it by now because of what's been happening in the Middle East. All inflation numbers are moving higher. Last week, we have seen some PMI numbers from S&P Global that probably hinted that, okay, the global economy is not really in a good shape at the moment. So if inflation numbers are moving higher, central banks are moving more to a hawkish stance of probably raising interest rates, the economy is not really good at the moment and cannot really tolerate a higher for longer interest rate policy. So we'll have to wait and see if inflation numbers basically add more pressure to the whole situation for central banks. If we continue to see heightened or higher inflation readings, this is something that will be answered probably tomorrow. We also have the job openings and the labor turnover survey, which is usually an important thing to look for. However, during this week, I think traders will be focusing more on the jobs report at the back end of the week. Moving on to Wednesday, I do see a couple of things to look for, which is probably for me, I'll be looking for the manufacturing PMI from the Chinese economy as well. Consumer confidence from the Japanese economy is also key to look for, and then the inflation rate from the European economy or the European zone for the month of June. This is probably something that we will be looking at, although expectations probably hint to to the figure staying at around the same levels. However, I personally do believe that inflation will continue on moving higher, and it will take some time for the lower oil prices that we see at the moment to really slow down inflation figures. However, again, this is something that we will be watching during this week. We also have a new speech by Kevin Warsh, the federal chairman, during Wednesday. This is really important because we don't really know if Kevin Warsh will be adding any further hints that weren't basically being told during the last press conference or his basically first press conference. If you have been following Jerome Powell for a while, or during his term, Jerome Powell usually said all what he wanted to say in the press conference, and nothing more actually pretty much was said during those side speeches. However, Kevin Walsh, new person, probably we will have to wait and see to probably learn or understand his behavior with those speeches, and this is why I'll personally be watching this. I think markets will be watching it too. We also have the manufacturing PMI, but this is from ISM, not the S&P Global for the month of June. Can we see the weakness or the weakness that we have seen during the last week, or probably a different scenario can unfold during this week? Moving on to Thursday, the 2nd of July, we'll be having the non-farm payrolls and the unemployment rate as well. Of course, a strong jobs report means that the labor market is still resilient and probably will motivate the Federal Reserve to think of that rate hike that markets are pricing in at the moment as soon as July to September, probably as long as inflation numbers are moving higher. So, a powerful, or I wouldn't say a strong jobs report, but a moderate jobs report, a not so weak jobs report will confirm this hawkish stance by the Federal Reserve, and we can see basically those dollar buys continuing higher and higher. This is basically for the economic agenda, the key things to watch for during this week. Let's have a look on the technical side of things, and we'll be starting with gold, of course. Gold basically has been moving higher. This is the 4-hour time frame, basically on the right side of the screen. Gold prices currently are trading around the $4,055 per ounce. The key level to watch for during this week is basically the 39.85, and you can see this drawn as the support level here. I have it on the chart. When you go down to the 1-hour chart here, you can pretty much see that all of this upward move recently that started on the 24th of June last week is basically a corrective move higher. The price action here says nothing of a reversal. However, it's a corrective move higher, and personally I can say that the resistance or the target for this retracement move higher should be anywhere around the $4,130 per ounce, and we'll be watching the price action around those levels for a potential reversal lower. Of course, when we look at the daily time frame here, any break and close below the $4,000 or the zone that we had just mentioned, 3,985, this is the key support level. Any break lower is basically a continuation for the downtrend on gold trading. Let's have a look on the S&P 500 here. What's been going on with the S&P, and starting with the daily time frame, I don't really like how the S&P has been trading recently, because yeah, we can all see that since, let's say, the 15th of May, we have been trading sideways. However, it's not really a well-defined sideways. I mean, where's the resistance here? It's not 76.20. We do have a resistance 75.50 or 75.50. We do have support here, and we do have support here. So I don't mean, okay, it's a sideways range, but it's not really a one that's well defined that you can trade the supports and resistances. You do have a lower low, and you also have a lower high, so it's slightly tilted lower. However, during this week, I can see that the S&P is starting on a strong foot. It's currently trading around the 73.90. And all I can see for now is basically that we do have a target higher, which is around the 75.60 points, which is pretty much something I highly expected to happen during this week. So a move higher around 200 or 250 pips is something that I do really expect during this week. And moving on to oil prices. Of course, we have seen the downward move on oil prices back to the levels of $74 per barrel, and this is basically the UK Brent oil. So far, markets have been doing nothing this week. It's still at the opening price pretty much. So basically, it's a clear downward trend. Nothing to say about this. The 4 hour time frame here is starting to form some sort of a double bottom. It's not yet confirmed. However, I can see that the levels of $73.50 per barrel, we have touched this once around the 25th of June, touched it twice on the 26th, so previously during the previous week. For now, as long as we hold above the 73.50, we'll basically be moving higher to the 76.50. In case we do see a break above the 76.50, basically the double bottom pattern will be confirmed and we'll be moving at least back to the $80 per barrel. This is something which is purely technical. This is purely based on the classical chart patterns. But something else I can clearly see, and I want to hint here, is that prices are moving lower. However, the momentum prices are basically moving higher. This is clearly a bullish divergence, which means that, okay, even if prices are moving lower, the momentum is not really dragging prices lower. Momentum, however, is on the other side. When the behavior between prices and momentum are not basically moving side to side, this basically means that the downward move is losing steam and we might be moving higher. So it's really critical for you to look at the levels of $74 or 73.50. As long as we hold above this support, I'm basically a little bit optimistic for oil prices during this week. First target should be 76.50. A break above, we are going at least to $80 per barrel. Let's have another final look on the Nikkei 225 to 25. And basically what's been happening is pretty impressive here. Slightly lower highs, slightly lower lows. That's on the 4 hour time frame. We can see how strongly the index is starting off for the week. And yeah, I do really see a good opportunity here to aim for another lower high. So if we say that's basically a price channel here, so we have basically bounced off the lower limit of the price channel. And if we just aim for a slightly lower high, just like the previous behavior has been, showing on the index here since the last week. So we are aiming for at least 72,000 points. We are currently at 69,800. So probably 400 pips or 400 points is something I really expect to see on the Nikkei 225 during this week. So that was all for today's week ahead video. Thank you so much for staying around, and we'll see you guys in the next week. Stay safe.